Welcome to today's episode of the Insurance, Life, and Everything in Between podcast. My name is Adam Brsan.
And I'm Chris Smith.
If you've yet to do so, hit that subscribe button so you never miss another episode. And if you love this podcast, don't forget to share it with a friend or colleague. We greatly appreciate your help and support.
So let's talk about keeping the carrier portfolio simple. I think a lot of people, they want to be recruited to fluff. They want to be told they can make $1 million in a week. They want to be told, by getting in their pajamas, they can buy a Bentley. And maybe it's our biggest failing, not selling or not recruiting to fluff. But what do you think?
Well, you know what? I don't think I want to work with people that are just going to buy into that sort of stuff. Honestly, to me, someone who, has realistic expectations kind of can see through that stuff, I would think. There's no way that a brand new agent can make $20,000 their first week in the business. If anyone's telling you that, they're full of it. This business, I wish I could say this business is easy. It's not. Places make it out to be easy, and it's not. You got to put the time in. You got to be consistent with your business. You got to purchase leads on a regular basis. You got to be able to keep up with that. Yeah, you can do really well. Yeah, you can make a lot of money, but it's not going to happen overnight. It's about, and I always tell people, really, the first 9 months is the hardest. Make it past those first 9 months, then you start to have some back-end commissions and everything else. But I think when you're surrounded by people that are kind of all in it together, kind of like what we built, I think that helps. I think that makes a difference. And that's something that people could, there's other agents out there. Maybe they had a week like I had, and they're like, this is enough. This is enough for me. I can't handle all that rejection. And, I'm just going to go back to finding a 9 to 5 sort of, set salary position where, to me, that's, I don't know, you're kind of minimizing your potential, in my opinion. And when you could bet on yourself, as I've always said, and get out there, and you're the one in our business that can decide how much money you want to make, but you got to be willing to put the time in. So I know that's not really our topic for today, but I know talking about these different places that recruit. And I've had conversations with agents. We have these recruiting calls. People reach out to us, and, everything sounds really good, Adam, but I already talked to this other place that told me that within a month or two, I'd be making $20,000 a week. Well, good luck. Yeah.
Good luck.
Well, fill me in.
Yeah. And
that sounds pretty good.
Just on the same token, I talked to a fair amount of people, because it's just a volume game, just like selling insurances, that want a base. I'm looking for a base salary plus commission. Oh, okay. Well, what are you looking for salary wise? And I'm just trying to keep the conversation going, between $18 to $20 an hour. Okay. You think you're worth more than that, though? Well, I just need it. I just need a base salary plus commission. All right, well, let's walk through the numbers together. What does that look like? And if that's the salary that you want to make and the life you want to live, that is absolutely your American choice. But if you have an insurance license and you're willing to bet on yourself a little bit, you're worth more than a base salary plus commission. Heck, on the lowest contract we could possibly offer, on free live transfer leads, I can make you more money. But you got to be willing to make that commitment to yourself. Like we say all the time, and all the content we've shared over the course of the last 2 years, if you have the desire to make it work, raise your hand and we'll find a way to make this work together. We've got agents on free leads. We got agents that buy leads. We got agents that do Medicare over the phone, agents that do both in person. If there's a will, we're going to help you find a way to put it together. But so we don't take up too much of your time, we're going to talk about keeping our carrier portfolio simple. And I'm going to open with one comment about that. In a time and a place where direct mail costs more money, where it's harder to work, let's just be real, it's a little harder. Where people are harder to get on the phone, a little meaner in person, you're going to have to be a little bit more efficient with your business. In a time and a place where you can't just sell final expense like it's 2016. You only have so much room in your brain for other products. I literally cannot fit more information in my brain. I can sell 3 final expense products, all the Medicare crap I got to learn, understand the ancillary portfolio, and that's all the room that I have. So when we talk about keeping your carrier portfolio simple today, It's so that you also have the neurological space available for cross-selling and all the additional products you're able to sell. So Adam, what you got on the presentation today?
Yeah, just I figure we just kind of have some conversation about this. Honestly, I mean, I think that
Okay.
there's a lot of places out there too where it's like they're throwing 20 contracts at an agent right away. I feel like that can be very overwhelming,
Mm-hmm.
especially when you got to learn. For really, I mean, things that really shortcut it are like toolkits and things like that when it comes to underwriting. But uh, there's still a lot of back office stuff that you have to learn. And it like I said, I think it can overwhelm an agent when they're contract with all these different companies that all do the same thing. So really, I just kind of wanted to talk about reasoning like behind only needing maybe 3 or 4 carriers and why that is really something to your advantage, only focusing on a few carriers rather than having business all over the place.
Mm-hmm.
And a few things that come to mind for me would be, well, you write a piece of business with one carrier, it falls off, and then you're writing with the next one, and then you're writing with the next one. I mean, you end up you're setting yourself up for bad business, chargebacks, everything else with a whole lot of different carriers.
Yeah,
So,
absolutely.
so
So
yeah, I mean, I think that that's something right there, and I mean, how are you going to make another thing I think about too, things that motivate me, carrier conventions,
mhm.
being able to qualify for a trip. If you're writing business with 20 different companies, it's going to be real tough to qualify for a convention.
Yeah, you're not. You're just literally not.
Yeah.
It's impossible. I've qualified for my fair share of trips. You probably qualified for more. And the mentality is you have to go into the home looking to write that company, even in the margins, like even in the situations where it might be a dollar or two or five more, you got to write it like 86% of the time. Otherwise, you're not going to be able to write enough business to hit it. I mean, we got guys in the agency like Bob who have qualified for trips writing predominantly one company. He's writing a lot of Baltimore Life now because leading with one company makes your life a whole lot simpler. My philosophy on it is also there are a lot of duplicate products out there. Like they may not be clones of each other. There are even carriers that are clones of each other. But there's a lot of products that, for all intents and purposes, are really the same thing. Like let's look back before Prosperity exited the market. Between American Amicable and Prosperity, there was not a ton of differences. Yeah, one took Direct Express, one didn't. But if you really got into the meat potatoes of the underwriting and the pricing and the comp and the process, it's kind of the same thing. Like you look at a Mutual of Omaha and a Life Shield. Yeah, very price competitive, very similar face amounts, very similar. But like really, when you get down to it, there's a lot of duplicate products. You only need so many price busting fraternals with low commission. They're all kind of built on the same chassis. What you
Mhm.
need, in my opinion, is one company that you can sell 80 to 85% of the time. When I was qualifying for Transamerica Hawaii, I sold a ton of Transamerica Immediate Solutions. It was stressful. The process sucked, but you could write 80% of your business with it. You need a second company that you can do 10 to 15% of what the other one didn't do good. And then you need a third modified-ish company that you don't know what else to do. Here's your whole last resort kind of company. Because if you're going to learn Medicare, ancillary products, have a life outside of the business, raise your kids, manage your business, pay your taxes, there's only so much room in your brain. And realistically, like you're saying, you start selling 4, 5, 6, 7 companies, you're going to start carrying debt. You're going to start forgetting how to do it. You're not going to be doing it right. It's not actually going to be getting issued. Like we've tried it, we've done it. Adam, when I left my first organization, NASB, 5 years ago, and I knew I wasn't going to be able to get a release, I didn't realize that in that 1 month, I had literally written everything in my carrier portfolio. I'm like, damn it, all of them. Well, if you had just written a couple, it would have made the process a lot simpler back then. So that's kind of my philosophy on why you only need 3, because you got all that other stuff you got to fit in your head.
Yeah. Well, another thing, Chris, debt doesn't just go away on its own.
Nope.
And, you know, it's not magically just going to disappear. And I understand, I get it. People are out there working, they got to earn money, they got to pay their bills. But what happens when you owe one carrier, a drastic amount of money, and then they terminate you, and then they throw you on Vector,
Mm-hmm.
and then all your other carriers put you on as earned?
Yeah.
What happens then? I know I've seen that happen. There's checks out there. I mean, the company I used to work with, I know that, like, every month they'd be running this check that would show any agents that were on Vector. And right away they would want to make sure that the agent was set up. They wanted proof that that agent was set up on a payment plan. And if they weren't, they would either put them on as earned, or they would give them 30 days to get put on a payment plan. And so just little things like that. I mean, people, again, we talk about stuff, Chris, that I feel like other places maybe don't want to talk about. We talk about, the stuff that people they kind of shoo away from or shy away from,
Mm-hmm.
but it's part of the business. And like I said, I mean, forever, I mean, I was always just about keeping it simple. I mean, for me, writing with 3 or 4 carriers is a lot. I mean, I went from one company for 11 and a half years, strictly writing them and nobody else, to another company, strictly writing them for 6, 7 years, something like that. And I did just fine. I did just fine writing business with those 2 carriers. It's not like I really was walking away from much business, if any. I mean, the only business I was really walking away from was probably not very good quality business anyways. And if people were in that poor of health, the chances of them living a long time are pretty slim anyways. So sometimes I feel like agents, they feel like they need to write every single piece of business out there. If they don't feel like it's a good business to write, you don't have to write it. And again, sometimes, we look at like some of these guaranteed issue products. Heck, if that's a big risk, that there's a chance that person might be dying soon, unfortunately. I
Gonna charge
mean, you're
back.
setting
It's
yourself
gonna
up for
charge back
chargeback.
because they're dead. Yeah.
And some of those companies too, Chris, I know the guaranteed issue, they'll charge you back the whole thing. They might charge you back 22 months if that person dies before the first 2 years are up.
Yeah, which really leads me to my next point about this. I'm just trying to put a couple of these out on some of the groups so folks can watch as well. We test all the companies, like all the ones, some of the ones you've never heard before and shouldn't hear about. We've tested nearly all of them. And we test them because we want to make sure that there isn't some serious fatal flaw that if we roll it out to somebody, promote it, contract to it, post it on social media, that it messes you up. Like, I could afford to put enough not bad business, but inefficient business on the books to find out it didn't work without losing my house. There are plenty of agents that need every single application to pay every single bill. And if it doesn't work, that's bad. We've written companies before and somebody will text me, why'd you pick them? Honestly, I'm just trying it out to see if it's something I want to encourage you to sell or to see if it's not any good. Every company, let me be real as well as we talk about keeping your carrier portfolio simple. And for those that are watching, this is a very practical point. Every carrier has something about it that sucks, like awful. They all have something that isn't very good about them. You personally just have to decide if you tolerate that particular suck or if that's fine. Every carrier no one product is perfect. Adam Senior Life just terminated 2 of their biggest agencies. Lincoln Heritage terminated big agency owners before. That sucks for them. But guess what? As brokers, as independent agents and agencies, we're never single carrier dependent. So even when carriers shut their doors over the last 6 months, we didn't have to recreate the business model because we had plenty of other ones to use. So I think that's also a blessing in disguise.
It really is. I mean, I kind of, I came from, Lincoln was like one of the first main companies that I was with for over 11 years. And I remember, like, just kind of like the culture and the way that it works there. I mean, you really do start to feel like you are like an employee almost, like, even though you're not. It feels, because they do make it feel kind of like a captive sort of operation. And the way that they do their leads and the convenience and everything else, it is kind of, a lot of agents are scared about what were to happen if I ever were to lose my contract here, because they get comfortable and they kind of like having the simplicity of everything. But most agents, they make it through that. Like they come to realize that, once you figure this out, I mean, you can handle it on your own as long as you're willing to. And there's other places out there that have programs that work. We have a good thing going, Chris, with our free lead program, where the comp, lower comp to start, but you're not paying for your leads. Honestly, probably a better situation than a brand new person going to a place like a couple of those companies that you mentioned that finance their
Yeah.
leads and start you on a low comp. So there's ways to do this, and there's people out there that are willing to help you. But yeah, we talk about just having like a handful of carriers. There's really not like a one size fits all perfect
No.
carrier like what you were saying, Chris. I wish there was. I was getting ready this morning and I was thinking about that. Like if there was a carrier that, you know,
Mhm.
had very loose underwriting and had great rates, they took just about everybody. That's where I would write all of my business. But that's where
So
everybody would write all their business,
yeah.
and
I guess
they'd probably be out of business.
Yeah, because guess what? The insurance carriers don't want all your business. They
Yeah.
don't. These insurance carriers have specific production numbers that they're looking to hit because they have to have a specific amount of reserves to pay out first year commissions and to pass regulatory standards, certain growth projections, certain fall off they're willing to tolerate. There's only so much business these companies want. A lot of times the things that they suck about are actually what business prevention techniques they kind of just leave in there so it doesn't get too out of control. There is not going to be a perfect company, but between a good blend of three companies, I think some other important things to think about is you need a company that you can sell on Monday so that by Friday you can pay for your leads. That's important. Not a lot of companies pay on issue nowadays, but you need one of them that does. Adam Forrester's used to be that for me back in 2015, 2016. And I kid you not, I was like hunting like a hungry whatever, finding that first Forrester's app I could write on a Monday so that I didn't have to worry about Friday with money for leads. You need a company that, maybe it pays you next month and that's okay too. But I've seen some big deposits from companies that I waited till next month to get paid on all that business for. And that worked fine too. And I think another thing that sometimes agents don't think about is and I'd love your opinion about this, when you get your financial footing behind you, like money's okay. You got your emergency savings, your taxes are under control, buying leads isn't an issue. You can start to lower your advances. You can move from a 9-month to a 6-month. You can take your number 3 carrier and put it on as earned. You can take from 6 months to 3 months. You can take your number 2 carrier and put it on as earned. When I was in high-speed personal producer mode, I had every single company, but a lot of the companies that I sold maybe 1 or 2 times a quarter, I'd rather just take them as earned and take them as they come, because you do have that ability, and most uplines are never going to tell you this, but to back down your advances as you increase your bank account.
Yeah. Well, a few things there, Chris, kind of going back to what you were talking about with, getting paid on issue versus getting paid on draft. Really, it doesn't make a difference. Like, I think it makes more sense to get paid on issue because you're going to get paid faster. It's really not safer to get paid on draft. Like people might think it is, but it's like the carrier, they're still paying the agent before that payment is even clearing on their side. So what's the difference? Whether they're paying you on issue or draft, either way, it's kind of like, in my opinion, it's like the same risk.
Yeah.
Unless they're waiting a week after the draft, once they know that payment's already cleared. But most companies that I know of, they don't do that because they know agents don't want to wait that long to get paid.
Liberty Bankers used to do that. They had a third option where it was pay me on draft and then like 2 weeks later when the draft is cleared. But really nobody does that anymore. So just write good business for God's sake. Collect a payment on the moment that you're there. Like there are ways to deal with it, but getting paid on a quick manner is important to me.
Yeah, just setting draft days properly is the key, really, in my opinion. setting people to coincide with their social security. If you're not, I don't know why you wouldn't. But then, yeah, like what you were saying about, kind of going on like a lower advance. I know agents that have done that, and they at first, or actually, I had an agent, my prior company, that was having some persistency issues, and I was able to talk the higher ups into putting them on a 6-month advance. They wanted to put him on like a as earned, and I said, why don't we just lower his advance and just kind of go from there? And at first, the agent was a little upset, but over time, he even told me, I kind of like it. I kind of like that 6-month advance. Yeah, I don't see as much up front, but now I'm in like month 7 and 8 and 9, and all of a sudden I got all this good money coming in.
Oh yeah.
So he, he actually, I think he ended up maybe switching some of his other contracts to like a 6-month advance, where, yeah, you don't see as much up front, but it does help you. You have a bad week or something, it always helps to have a little bit more of a cushion, or at least some money that is going to be coming in. So
Yeah, I think
that
that
makes
also comes
sense.
from having a long-term vision. Like, yes, you are going to make less money up front, but I did the same thing. I moved a carrier from 9 to 6, and then as soon as month 7 hit, I'm like, whoa, look at these deposits I'm getting for stuff that's stuck on the books. It's a short-term, pain point, but it does improve you long-term. We did have a question from Aaron that I would love for us to answer in our final 10 or 12 minutes. And I just realized you can push a button and the whole question pops up, which is pretty cool. He asked a question about the objections, call me after the election, concerns about the economy. And I'm thinking that this is going to make for an amazing long form training on Monday, but it really harkens back, in my opinion, to manifesting. What is it? Like, you get what you're looking for. You create what you're trying to find. I had this conversation with another one of our agents on Thursday. He's dealing with different mindset frustrations. And I said, if you're looking for negativity, negativity is going to find you. If you're assuming bad things are going to happen to you, bad things are going to happen to you. Or at worst, you're not going to break out of the bad thing quicker than you would have otherwise. So what do you think when you're dealing with situations where these same kind of frustrations and challenges and objections and concerns are constantly popping up? Are we manifesting them ourselves? Or do we just need a quick answer on how to overcome them when they come up?
Yeah, we could be manifesting them ourselves. I am so much about mindset. And like I said earlier, sometimes the rejection can start to wear on you. And that does mess with your head a little bit. Where really, if anything, need to figure out ways to kind of get right back into that positive mindset, maybe brush things off a little bit faster and don't let it affect you so much, because yeah, that's what happens. Like I said, I think that's probably what's happened to me the last few weeks. Just the rejection starts to wear on me. I think too much about it. And then I don't feel like you're really at the top of your game when you're sitting with people. You almost, it's almost like you're just waiting for them to tell you no, because that's what you've been hearing
Yeah.
so much.
Man, I know that bank
Rather
objection's
than,
coming. I know they're going to tell me
yeah,
they can't.
yep,
They're not going to give me their bank information. It's coming. I know it's the next thing they're going to say.
yep.
I know it's coming. They're going to say they have to talk to their kids about it. They're going to have to say they have to wait until after. You kind of like, it's almost as if, as much as you can preempt an objection, you can create one out of thin air the same way. It's crazy.
Yeah, most definitely. I wanted to go back to Chris, talking about, the different carriers. I know you mentioned how a lot of the different carriers, like you said, they don't want all of your business.
Mm-hmm.
And, you think about like modified rates, and you look at some of the carriers and you look at like how high their modified rates are. It's like that's on purpose. They don't
Mm-hmm.
want to come straight out and say, we're not going to insure these people. Because again, that would make them look bad, because all the other carriers are kind of doing the same thing. So people that have significant health issues within the last 2 years, yeah, they don't want that business. It's really not profitable. And that's why they put the rates up to where they're at. Like they'll take the business, but they know that by having those rates as high as they have them, they're not going to get a ton of it. So the risk is pretty limited.
Yeah.
And I think that, again, that's why there really isn't that one size fits all. There was one earlier this year, I don't have to name names. I don't want to throw anybody under the bus or anything, but there was one earlier this year where, no RX check. We take congestive heart failure day one, as long as they're compliant with going to the doctor and taking their medications. Like, that's risky business. And I think, sooner or later, I think they start to realize, wow, we're assuming a lot more risk. All of a sudden, then they add in the RX check, which is it's gonna be used to protect them a little bit.
Yeah,
But
the issue is in a broker space, and we've had these discussions with guests and stuff, is agents anti-select the heck out of companies, and actuaries don't understand agents. Like, that's just the reality of life. Like, physicians don't understand paramedics to the same degree. School administrators may not understand paraprofessionals. There's just a gap between the different jobs that we do. Actuaries definitely don't understand what we do. And what we're going to do is we're going to get into a home and figure out the best choice. And then the next company, the best choice, the next company, the best choice. And the company isn't getting the actuarial mix they expected. Steve Weber said it to me before. He knew that Transamerica was getting anti-selected for just standard rate business. So what did Transamerica do? They built a standard rate product so that they weren't going to get continually anti-selected and not get a good, healthy mix of business. Adam, I don't know if you remember Settlers Life?
I remember them, but they were real big, when I was with that employee with that one company.
Yeah.
And so I wasn't contracted with them, but I remember, like, they were they were pretty hot there for a while. And and again, I think it was correct me if I'm wrong, but I'm assuming they had really, really good rates and just made it easy to do business with them. But that, I guess, caught up with them because they're no longer in business.
Unfortunately, someone bought them and decided they didn't want to continue final expense distribution. But the interesting thing about what they did is they had a preferred tier, a standard tier, and a modified product that had like 3 questions. You can't be bedbound, HIV, or terminally ill. And they called it their bronze plan. And they wanted all of your business to the point where they even had that bronze product, and they even had limited pay options on it. I'm like, how cool is this? You could be on a 10 pay on dialysis. It was amazing. But smartly enough, only a certain percentage of your business could be bronze business, or they wouldn't take it. So they understood the balancing act there that was necessary, because that small company at its time actually understood the marketplace. And I think when we're talking about selling just 1, 2, or 3 companies, not just one, but like a mix of 3, it's fair to the company too. Like, these companies can't afford to continue to keep the products as is if all they're getting is your massively overweight COPDers with 8 toes. They just can't do it.
Yeah.
Giving them a healthy mix of not just giving everybody your modified card business like everybody did to SNL for 7 years is eventually going to catch up to you.
Yeah.
Not just writing. It's got to have a healthy mix, because in the end, there's a 3-legged stool that we all operate and sit on. What's best for the client, what's best for the agent/agency, and what's best for the carrier. And I forget the guy that said it, but one of the legends in the industry said, if you treat the carrier like you own it, that's the best way to treat them. So understanding that 3-legged stool on that 3-carrier balance, I think, is the biggest takeaway I could leave people with today.
Yeah, and I'll run down mine real quick. I'm not afraid to kind of throw the carriers out there that I like to use and the reasoning behind them. Chris, I mean, that the last couple years, I'd say, close to a couple years now, I've been running with AmAm, American Amicable. I've enjoyed doing business with them. I think they're good people over there. And my favorite thing about them, honestly, is that they make my job easier, because they're one of the only carriers I know of that when I run the e-app, if it comes back other than applied for, they let you know why. There's medications that pop up that they ask you about. The one last night that I wrote, I originally I was writing it with American Amicable, and it came back some medication that she was taking. I forget, some sort of, I don't know, some sort of stomach issue or something. I can't remember exactly what it was, but American Amicable wanted to put it to graded. And it was based off of this medication that this lady had to take like 3 months prior to like this surgery that she had to have that fixed the issue. But anyways, from there, I knew the reasoning behind their decision, but my goal is still to be able to get that person covered right away. So that's where then I shifted to the new Transamerica product, that, you know, the shirt that you have on there, Chris. They seem to be maybe a little bit more lenient on some health issues than American Amicable. So that's kind of right now. That's kind of, I go American Amicable. I like to know, you know, if it doesn't work there, at least they're giving me the reasoning why that's going to make my life easier, where I'm not just playing guessing games trying to figure out where to put that business. And then Trans, you know, I'll try them, the Trans America Express, the FE Express policy. And then after that, you know, Baltimore Life, you know, I've seen that maybe they're even a little bit more lenient than Transamerica on some things. You know, Baltimore Life, you know, with like the COPD and stuff like that. You know, they pull out a bunch of inhalers and stuff. That might be the first place I turn to, even before trying to do an app somewhere else. So, and then from there, just like a guaranteed issue, you know, the Royal Arc, you know, Royal Arcanum I've been using. It's not a true guaranteed issue, but it's basically a guaranteed issue.
Yeah,
I
they
don't
don't
know
qualify
anything
for
that they're
that.
not
Like,
going to take.
yeah, if they don't get that, it's probably not worth it.
But it's easy. You know, it's an easy
Yeah.
app. They're fraternal. I'm sure they don't want just that business. I'm sure they have their other whole life product as well. You know, I'm sure they want a mix. I'm sure they don't just want the guaranteed issue, but again, you know, yeah, maybe, you know, run into some younger people, that could be an option as well. You know, their standard whole life product, but yeah, that's really it. You know, that's really the four that I've been focusing on. And honestly, I mean, I couldn't remember the last time I wrote an app with any but those four, just because of the fact that I like to keep it simple. You know,
Yeah.
on the one, if it doesn't work there, well, then I kind of know where to turn to from there, like what you said.
I got a few more to throw in there for you and some interesting insights kind of to back and forth that one before we wrap up.
Yeah.
Guaranteed trust life over any kind of guaranteed issue product. Like maybe you don't have a Royal Arcanum for one reason or the other, but realistically, you can do all you need with GTL the same way.
Yep.
And you don't need GI if you have GTL. I'll leave it at that. GTL has a great ancillary product portfolio. I think maybe Banker's Life might be nice. I'm kind of trying to see where they fit in the bag lately, but GTL over any kind of GI. You don't need Aetna, Aflac, and AHL. One of those three is literally the same thing. You know, it's great that there's different versions and different brandings, but it's the same product. If you can have Aetna Senior products, it also gives you access to the other ancillary products that they offer. You don't need three of the same thing. A Cincinnati Equitable, actually a nice, awesome, small mom and pop company in about 9 states, takes Direct Express, instant decision e-application. You can literally write husbands and wives at the same time. Good comp, not the cheapest rates, but if you have them, it's worth writing them. Liberty Bankers, I think, kind of fell out of popularity for no particular reason. 18 to 80. Realistically, you can get somebody onboarded with Liberty Bankers in like 6 minutes and then send them out in the field next week and see if they do their job. Baltimore Life. Again, you've already said it, so there's not much that I need to say there, but their A priority product on top of iProvide is absolutely awesome. Instant decision. Awesome product. And just understanding that relationships matter too. We love to do business with relationship-based companies, people that have an investment in the field, understand distribution, are willing to work with agent partners in situations where maybe they don't come in with a squeaky clean record, but they're willing to give them a look again. And understanding the power of those type of relationships, I think if you're watching out there, carrier partners, we appreciate those that look at us in a mutually beneficial relationship.
Most definitely. So yeah, I think that's probably about all we got for today. So yeah, if there's any other questions, feel free to throw them out there. But yeah, thanks again. Oh, Gary asked,
Yeah, Gary asked, do we use Citizens? I think Adam dropped off by accident. In the states that we have them, we absolutely do write them. In the states that we don't, we don't. They did recently add that underwriting protection to their product. So Citizens is being smart, but now being a little bit stricter. Pearl asked the question, how do I access the recordings? Everything is available on our YouTube channel. Insurance, there it is, life, and everything in between. Nearly 400 recordings, including conversations like this, including conversations like my sales presentation, conversations about Medicare, final expense, baseball. If you are an agency partner of ours, in our Google Drive, 4 years of morning call training is available for audio on-demand listening there, and as well as the podcast. Adam has us on literally every kind of podcast platform as well. That's available for you guys to listen to as well.
And yeah, I was going to tell Gary, I think because I was talking about the different carriers. Sika is not in Illinois. So
not in Maryland.
I've been able to market them to help agents who want to use them because they are pretty easy, I think. But I haven't had the ability personally to be able to write business with them because they're not in Illinois and I write my business face to face. So yeah, unfortunately, I haven't really been able to use them. I am able to market them, which I know when people want them, well, great. I'll do what I can to help you get them. But yeah, like I said, keeping it simple, focusing on 3 or 4 carriers, and that's really all you need, and if places out there are trying to contract you as an agent out there with 20 different companies, ask yourself why. Why do I need to be contracted with all of these carriers? And a lot of it has to do with the fact that they just want to lock you up. They want to lock you up and make it difficult. Like if you decided that maybe you wanted to move forward somewhere else, well, if they got all your contracts locked up, makes it maybe a little bit more difficult. So, be aware of that. If anything, when you join a group, tell them, well, I only need maybe 3 or 4. I don't want to contract with all those different carriers, give me like 3 or 4 that you think I need. And that's all I need. Because you don't have to sign a contract with every single carrier just because your IMO is telling you that you need a contract with them.
Yeah, our philosophy is we get you one and we want to see what you do with it, like in the next 7 days. Whatever one comes out first, typically, hopefully one that pays pretty good. But we're going to get you one, and then I want to see if you're going to go run and gun with it. And then I promise you, we will add more as you go, as they become available. But all you need is one thing to get started. And then as a veteran producer, I'm going to try other stuff out, and I'm going to try to encourage you to try it out because everyone's preferences may be different. Everyone needs may be different. And we're always going to remain on the cutting edge so that if one day you wake up and your favorite toy came off the market on a Friday, you're not going to miss a beat on a Monday. But it only takes one to run and gun, and then we'll take care of adding the rest as we go.
All right. Well, y'all have a great week. Thanks again.
Take care.
And this concludes another episode of the Insurance, Life, and Everything in Between podcast. If you like what you heard, don't forget to subscribe, share with a friend or colleague. And if you have any comments or suggestions for future episodes, please leave those too. Any input is greatly appreciated. Thank you.